If you have set up a company and appointed yourself as a director, you will have to pay national insurance contributions in two ways. Keep watching to find out. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. If you have set up a limited company and appointed yourself as a director, you will pay national insurance contributions, also known as NIC, in two ways. The company itself will pay NIC as an employer, and you will personally pay NIC on your director's salary. Now, in this video, we discuss the basics of national insurance for limited companies, including the different types of contributions, current rates, and how to deduct and pay NIC through your company payroll. The rates and figures stated in this video apply to the 2023-2024 tax year, which runs from the 6th of April 2023 to the 5th of April 2024. So let's get started. What exactly are national insurance contributions? National insurance is a type of UK tax that is paid on earnings from employment and profit from self-employment. These contributions fund and provide entitlement to certain benefits and the state pension. The requirement to make national insurance contributions applies to employers, employees, including company directors, and self-employed individuals. Paying national insurance is mandatory if you are at least 16 years old and an employee earning more than £242 a week, or self-employed and making a profit of more than £12,570 a year. UK employers must also pay national insurance contributions on their employees' earning, expenses and benefits. Your limited company is classed as your employer even if you own and operate the business as a sole director and shareholder. HMRC collects NIC from employees and employers through PAYE. If you're self-employed, for example a sole trader or LLP member, you need to report and pay your national insurance contributions through self-assessment. Now, let's take a look at the different types of national insurance. There are different types of classes or types of national insurance. The type of NIC that you pay is dependent upon employment status and earnings. Firstly, Class 1. Class 1 national insurance falls into two categories: employee or primary contributions and employer or secondary contributions. Employees pay primary Class 1 national insurance contributions on their wages if they earn more than £242 a week and are under the state pension age. Most employees will pay the following NIC rates on their income for the current 2023-2024 tax year: 12% on earnings between £242 and £967 a week, or £1,048 and £4,189 a month, and 2% on earnings over £967 a week or £4,189 a month. There are different national insurance rules for company directors. Contributions are assessed on their annual income rather than on what they earn each pay period. Therefore, as a company director, you will pay 12% on salary earnings between £12,570 and £50,270 a year, 2% on salary earnings above £50,270 a year. However, you can make payments on account of directors' contributions throughout the tax year based on the actual intervals of salary payments, for example, weekly or monthly, in the same way as other company employees. Employers must pay secondary Class 1 national insurance contributions on their employees' wages and directors' salary. The current rate is 13.8% on earnings above the secondary threshold of £175 a week or £758 a month or £9,100 a year. This applies even if you are the director of your own limited company and the only employee. Employers' national insurance is classed as a tax-deductible expense for businesses. As the owners of a company, this means that any employer's contributions your business makes will be deductible from taxable profits and will therefore reduce your corporation tax bill. So, whilst national insurance contributions may be an additional cost to your company, making these payments can be worthwhile for both you and the business. Next, we have Class 1A and 1B. Employers must also pay 13.8% Class 1A or Class 1B contributions on any taxable benefits or expenses they provide to the employees or directors. Class 1A is payable on the value of work benefits, for example, a business mobile, company car, or health insurance. Contributions are calculated as a percentage of the cash equivalent of the benefit. Employers pay Class 1B contributions if they have a PAYE settlement agreement. This enables the business to make a single annual payment to HMRC to cover all the tax and NIC due on small or irregular taxable expenses and benefits. The next types of national insurance are Class 2 and Class 4. Class 2 and 4 NIC apply only to self-employed people who earn profits of more than £12,570 a year. The current rates are Class 2, £3.45 a week, and Class 4, 9% on profits between £12,570 and £50,270, and 2% on profits over £50,270. Most self-employed people pay their national insurance contributions through self-assessment after the end of each tax year. However, some individuals are required to make advance payments or payments on account toward their annual tax bill. Lastly, we have Class 3. Class 3 NIC are voluntary contributions that you can make to fill or avoid gaps in your national insurance records. If you have any gaps in your records, you may not have enough years of contributions to get the full state pension or qualify for certain benefits. As a company director, you may wish to make voluntary national insurance contributions if you paid yourself a director's salary below the lower earnings limit, or LEL, in previous years. Adopting the remuneration strategy of taking small salary payments and high dividends is generally the most tax-efficient way to pay yourself through a limited company. However, care must be taken to prevent gaps in your national insurance record. If your annual salary is ever less than the LEL, which is £6,396 for 2023-2024, you will not accrue a qualifying year towards the basic state pension. Therefore, taking a salary above the lower earnings limit, but below the primary threshold of £12,570, will entitle you to national insurance credits without triggering any primary contributions. The Class 3 voluntary national insurance rate for the 2023-2024 tax year is £17.45 a week. Now, so far we have covered the different classes of national insurance, but how do you pay NIC through a company? If you are the director of a limited company, you are responsible for paying both primary and secondary Class 1 national insurance contributions through HMRC's PAYE system as part of your company's payroll. Every time you pay employees' wages or your own director's salary, your payroll software will calculate and deduct income tax and primary NIC from each person's earnings and calculate employers' national insurance payable by the company on earnings above £242 a week. You must report these payments and deductions to HMRC on a full payment submission on or before each payday. The company must then pay all primary and secondary contributions to HMRC by the 22nd of the following month or the 19th if you pay by post. Depending on whether you provide taxable expenses and benefits to yourself or other employees, the company may also be liable for Class 1A or Class 1B contributions. These must be paid to HMRC by the 22nd of July after the end of the tax year. Now, let's take a look at how to work out your director's national insurance contributions. Now, there are two ways you can work out how much national insurance you owe as a company director, depending on the frequency of your salary payments. If you pay yourself on an irregular basis, use the standard annual earnings period method. Number one, Each time you pay yourself, work out your national insurance for your total salary earnings over the tax year to date, including any bonuses. Number 2, to work out what contributions you now owe, deduct the total employee national insurance you have paid to date during the tax year. If you pay yourself on a regular basis, you can use the alternative method. Number 1, each time you pay yourself, work out your national insurance contributions only on your pay for that period, including any bonuses. And number 2, at the end of the tax year, use your payroll software to work out whether you owe more primary national insurance, and if so, deduct it from your last salary payment. When you report your director's pay and deductions to HMRC on the full payment submission, enter one of the following in the Director's NIC calculation method field. AN if you are using the standard annual earnings period method, or AL if you are using the alternative method. You must pay your Director's NIC to HMRC after running your usual payroll, for example, weekly or monthly, even though contributions are based on annual earnings. Finally, let's consider if you have to pay NIC on dividends. You will not pay national insurance contributions or income tax on any dividend payments you receive from your shareholdings. Instead, you will pay lower rates of dividend tax that's based on your income tax band. Dividends are payments that a company makes to its shareholders from profits after the deduction of corporation tax. This prior taxation is the reason why shareholders pay a lower rate of personal tax on dividend income. So there you have it. Paying national insurance contributions through a limited company is a relatively straightforward process if you use accounting software. However, you may find it beneficial to speak to an accountant if you need tax advice or help dealing with your payroll affairs. If you do have any questions, please leave them in the comments section below and we will get straight back to you. And if you are thinking of starting a limited company, well then we'd love to help you. We offer a variety of company formation packages which are all designed to get your business up and running as quickly as possible and as simply as possible. Take a look at firstformations.co.uk. That's 1ST for all of our formation options. And in the meantime, be sure to subscribe to our channel to get more tips and advice on limited companies, reporting requirements, tax obligations, and more. We're always happy to help and we can't wait to hear from you. Until next time, cheerio.